Hey there, this is Kevin Newber. Thank you so much for watching today's Money Script Monday video, where I'm going to be talking about how to get back the money that you just lost in the stock market. Over the last 30 days or so, we've seen some extremely volatile markets. We've gone from historic highs to very recent lows and swings that were completely unexpected. Nobody could have predicted that a global pandemic, would have caused the economy to become so anemic. Imagine what it feels like if you're a 60-year-old who was getting ready to retire in the next 5 years. They've been saving up their money their whole entire life. Suddenly, they see their 401k or their portfolio balance reduced by a substantial amount. They have a dilemma at this point. What do? Well, you can sit around and wait and hope that the stock market recovers so that at the time you retire that all that money comes back, or it might not, and you simply end up retiring with substantially less money. So that's what most people are feeling like or thinking about right now. But I'm going to show you what you can do today in order to make sure that you get that money back. Over the last 10 to 11 years, we've seen historic bull market in the stock market. We've never seen anything like this before. Over the last 2 to 3 years, it's been a huge year-over-year increase. The Dow, the recent high on the Dow was 29,568. That was just within the last 45 days or so from the time of this recording. But with this historic high, we've seen this giant decrease. And at the time of this recording, the Dow the price is 21,256. Now, whenever you watch this video, I guarantee you this is going to be a different number. The Dow is going to be a different number. It might be higher, it might be lower. But my point and the lesson that you're going to learn from this is going to be the same, no matter what the current price is today. This decrease of 28%, if you take action today with your portfolio, we can get it back in the next 5 years. So let's say that you're a 60-year-old male or female, and you have $500,000 in your 401k balance, and you decided to go and purchase an annuity that has a guaranteed income rider that will produce a guaranteed income for the rest of your life at some point in the future. Well, at age 65, so 5 years into the future, it will guarantee that you can have an income stream of $29,000 per year, which seems like a good number. This is if everything goes perfectly wrong, so the stock market never goes up. You never earn any interest inside your annuity. This has never happened over a 5-year period, but let's just assume the worst case scenario. That's where we get that $29,000 per year. Now, the annuity is going to earn some sort of interest rate in reality between now and 5 years. And if it earns a historical interest rate of 3% or something like that, then it'll give you an income of $34,712. So, this number is somewhat meaningless to us. What does $29,000 mean of income? What does $34,000 of income mean? Because we always think of how much money we have in our portfolio, which is the $500,000. We never think of how much income that this portfolio is going to produce. So what I want to do is I want to take that income stream, that $29,000, and I want to come up with an equivalent amount of money that you need to have in your 401k or retirement portfolio to give you that same income stream. In the financial planning world, there's something that we call the 4% rule. And this video is not about the 4% rule or debating about how its merits or the things against it, but it's something that we get taught when we get designations and our securities licenses and things like that. And it basically states that if you're a 65-year-old, if you want your money to last your entire life and never run out, that the safe withdrawal rate that you can take from your portfolio is 4%. That's all you can take. If you take out more, then you're going to run the danger of running out of money. And if you take 4% or less, then you'll have enough money for the rest of your life. So it's really easy for us to take this $29,000 of income using this 4% rule and derive a equivalent amount of money that you would have to have in that retirement portfolio to have that same income. So for $29,000 of income, that's the same as having $725,000 inside your retirement portfolio. To produce the $34,000, you would have to have $867,000 inside your retirement portfolio, which is, a pretty big gain from the $500,000 that you have today after the stock market went down. But to make this a little bit more concrete, what I want to do is I want to say, okay, what rate of return is that? Like, what's the equivalent rate of return? How much does my money have to grow from 500 to 725 or at 867,000 in order to have that same growth rate. And that math is easy too. If we took that money and for 5 years it grew to this 725, it would have to earn 7.71% every year for the next 5 years, no matter what. There's nothing out there in Wall Street that can actually do this, but that's what you would have to do to get that same equivalent amount of income. On the non-guaranteed income stream, which is the 34,000, it would have to produce a rate of return of 11.65%. So it's a much, much higher rate of return. So to bring this all together, the question I'd like to ask is, if the Dow is 21,256 today, what would the Dow have to grow to in 5 years in order to have the same rate of return and to give you the same amount of income on the day that you retire, assuming that you just put all your money into the stock market? The guaranteed amount that would have to grow to, the Dow would have to grow to $30,814. The non-guaranteed income would be the same as the Dow growing to $36,826. That is a pretty big increase. In fact, if we look at the historical values, the price was $29,568. And what we're saying is that if you put your money into an annuity today, you don't have to sit around and you don't have to hope that the stock market recover. It might recover, it might not recover. What you can actually do right now is you can take your retirement portfolio or a portion thereof, you can put it into an annuity. If you defer it, then you can produce an equivalent income stream as if that asset value was in the Dow Jones Industrial and it grew to 30,814. That's what you can do today, completely guaranteed. You don't have to worry about the stock market. You don't have to lose any sleep tonight if the stock market goes down. Everything's completely taken care of. All that risk and uncertainty is completely removed from your retirement. So thank you so much for watching this video.